Welcome to the midday show. We're just going to wait for a little bit here until we get a lot of people in because it takes a little bit of time for people to jump over from the other stream. We're going to do some shout outs, Adair and I, for those who are in the chat first. We're going to be talking basically about what we were talking about yesterday. Moving averages. We're going to wait. We're going to extend that principle to some other indicators that use moving averages. There we go. We got Gustavo. We got Vin. We got Renata. What? Oh, this is happening now? Yeah. I do the shout because the people migrate over, so I gotta do this whole thing. Wuko, Beatrice, D's Nuts, Darwin, Pompe, yes, Darwin, yes, Jaspreet's there, Mike P, Juan Padilla in the house, Bitchin, okay, Ponzi Fonzie, JB, okay, there we go. Now there's just way too many people. My man Adam, I see you, Adam, Arsenal fan extraordinaire. Juan Felipe, yes, okay, guys, all right. Let's get to the topics at hand. We are going to be talking about MACD and Donchian channels. MACD stands for Moving Average Convergence Divergence. It's apropos given what we were talking about yesterday, which is moving averages. These indicators use moving averages in one way or another, so it is appropriate that we extend the learning principle from yesterday and go on. But full disclosure, I do not use these technical indicators on a day in, day out basis. However, I do have them in my long-term portfolio for my swing trade analysis and my long-term outlook. And you know, if you want to use them intraday, obviously there will be ways for you to do that. And we will be talking more about that. But before we go on here, and well, hold on. We didn't even get Adara in the shot. There we go. Now we got our girl Adara in the shot.
Hello.
It's your girl Adara. Just quickly here, in an affirm trade, long there on the hold of the support level at the $30.20 area. That big move up. We had a move down, corresponds with the top over here. So this was clearly a resistance level. I looked for it to flip as support, and it did exactly that, okay? So now we're knocking on the door of 31, and again, we already broke it. We didn't break it decisively. I'm looking for a more decisive break. Here comes 31 again, and there's the size at 31. Again, not surprised. I saw it last time. I'm seeing it again on AFRM. Let's look for a decisive break of that. And then we have gang stonk. Yes, wetting our beak through the break of 13 on that one as well. Looking for continuation. Much smaller size on GameStop. Just trying to get you know, things interesting here. But before we start the lesson, Adara, how's your morning?
My morning is good. I am actually currently in a trade. We're trying not to put the Meta in Meta. I am in Meta. Yeah, I need to stop using that one. I've used that with every stock that has like a meh sound in it. But yeah, Meta is actually not too meh right now. We're up about 0.5% on the day. I saw the higher lows. I saw the higher highs. I bought it on the dip. We're by the EMA. I like the, you know, all the conversions of the technical elements in play here. In terms of my out, I was kind of measuring the distances here between the higher highs because, you know, we're using technical indicators. If we get, because we had like, we got to 336.60, then the next high was 336.80. Therefore, mathematically, I think we could get to 337. So that will be where I hopefully get my out. If we see some traction, I will probably take some profit earlier, but I like the idea of getting out or at least saving a piece of the dream at that 337 area. But yeah, not at all upset about this trade right now.
Yeah, and I don't think it's a bad look, like I told you off camera, especially with that 16,000 hold that we just had.
Yeah,
right
like
now.
The NQ is also working.
Yeah.
Like there's a lot of things working for Meta.
There you go. Okay, so I'm really close to getting stopped out of this GameStop trade. If it comes back into my entry here, that'll be the end of it. I'm not going to let this go against me. This is more of a nostalgia trade than a real technical setup. I didn't really get it in a good price, and there it is. I'm going to cancel the rest of that, so I don't have to worry about it. Profitable trade. Don't need to worry about it. Look at a firm fly through 31 there. The Katina man celebrating that one. He's in it as well. AFRM, the gift that keeps on giving. A good day yesterday, good day today. I'm getting so excited. I can't even begin the material here, Dara, and we're going to get in trouble.
It's exciting. Got to celebrate a little bit.
All right, guys, let's get to work. Let's get to work, baby. Let me load up my moving average convergence divergence chart, and we're going to look at, very appropriately, AFRM on that. Let's put in the ticker so people can follow along. Now, I gotta tell you, this is not the most complicated material in the world, but it's definitely a little more complicated than the stuff we are looking at, mainly because you have multiple moving averages that you have to take into consideration. There are many calculations happening here on the MACD, the moving average, convergence, divergence. 99% of it is being done by the computer for you. It's only like in the distant past that you had to do these mathematical calculations yourself and then plot them on a chart. We live in 2023, almost 2024. We needn't do that anymore. But here we go. Moving average, convergence, divergence. What the hell is it? It is basically a trend following, okay? Not mean reverse, trend following momentum indicator that shows the relationship between two EMAs, two exponential moving averages. In case you missed yesterday's lesson, the exponential moving average more heavily weights the recent price action. Juxtapose that to the simple moving average, which doesn't weight the more recent price action. Each one is given the same weighting, okay? So the MACD is a trend-following momentum indicator that shows the relationship between two exponential moving averages of an instrument's price. The MACD line is calculated by subtracting the 26-period EMA, and we'll get to that in a second, from the 12-period EMA. And you'll be able to see that on the chart here as soon as we get to it. All right. The result of the calculation is that the result of that calculation is the MACD line by subtracting the 26 period from the 12 period, okay? And then you get this MACD line down here, and we'll talk about the signal line and the other line as well. Come to the chart, Rammer. Just leave it on the chart because I have to explain things on there, okay? All right. A 9-day EMA of the MACD line is called the signal line. Down here, you'll see on my purple graph over here, on my graph, the purple line is the signal line. So when you're looking down here, this purple, let me see if I can make it thicker so people can see it better. Yes, I can. There we go. Fantastic. I'm gonna make these both thicker.
I like that.
Yeah, now you can see them much clearer, right?
Yeah.
Okay. So the result of the calculation is the MACD line. A 9-day EMA of the MACD line is called the signal line, which is then plotted on top of the MACD line. The MACD line will be the blue line, okay? Which can function as a trigger for buy or sell signals. Traders may, Traders may buy the security when the MACD line crosses above the signal line and sell it or short the security when the MACD line crosses below the signal line. So what you're looking for in a very simplistic form, and this is not the way it's always used, okay, by the way, is when the purple line crosses above the blue line from the downward position into the upward position. That would be a buy signal. Now, we're going to talk a little bit later about how to use this one in the same way that we used RSI, which is for divergence, looking at the MACD diverging from the actual price action itself. So there's two ways, like with the RSI, you can use it for, to short when it's oversold, buy when it's overbought, or you can actually look at the peaks being made on the RSI or the troughs being made on the RSI and look for a divergence between those peaks and troughs and the peaks and troughs taking place on the actual price action itself. So there's a couple of ways you can use the MACD line, okay? MACD indicators can be interpreted in several ways, but the most common methods are crossovers, like one I just mentioned, and divergences, okay? And you can also use it for rapid rise and falls. So you're looking for just big spikes up, and then you're looking for a possible mean reversion down, okay? So any questions before I continue, because there's a lot more to get
Yeah,
through.
I was gonna say, I think for like time frame, is it one of those things where time frame matters? Because I know I was reading some of my notes on MACD. I was saying that like they're like, oh, you have to wait a couple days for like confirmation. So like, does the time frame make a difference for something like this, especially because you're using like specific EMAs? You
know what? I would never say no to using time frame, because I feel time frame is always an important factor. However, I think that in this case, especially when using on an intraday basis, time frame, you're going to have to shorten that up. Okay. So what you'll be looking for is exactly what we're going to get talking about in a second, which in this case, we're going to be talking about the crossovers, where the signal line crosses above the MACD line and how that triggers a possible buy signal and vice versa as well. Okay. But before I do that, I got to wet my beak here on another little profit taker on our friend AFRM, because it's now topping out right above that $31 area. So we're going to wet our beak on that one. We're going to continue to let it ride, though. I think this is a hold trade unless we really decisively give up that 31. I mean, I don't really care about wicks below 31. I just don't want to see a decisive break below that $31 level. Okay. So moving back here with MACD. I don't care. I'm not going to tell you guys about the formula. All right, let's go. Learning from MACD. That's the headline here. Let's put that bad boy back up. Sorry, just get that. So the MACD has a positive value as shown in this blue line down here, okay? Whenever the 12-period EMA, indicated by the purple line here, is above the 26-period EMA, which possibly could have a negative value. The level of distance that the MACD is above or below the baseline indicates that that distance between the two MAs is growing. So what you want to look for here is the separation or the distance between these two lines over here. Let me just pull up actually something else, because I think I'm missing a possible indicator here on my MACD. I am. Yeah, see, that's the problem. I'm missing a line. So this MACD over here has this one over here, and it has these ones over here, and I don't know why that didn't copy over. So MACD, because I have the 200 and the 50, that's fine. I don't need to use that. That's fine. You're supposed to use that with them, but I'm not going to use it. We're just going to use these two over here. Yeah, it's okay. All right. Sorry, give me a sec here. MACD is often displayed with a histogram. As you can see over here, we have these bar charts right at the bottom below the volume that graphs the distance between the MACD and its signal line. So the greater the distance between the two lines, the higher the bars on the histogram are going to pop up, okay? If the MACD is above the signal line, okay, and your signal line here is 0, I don't know if you guys can see it, but there's a 0.00 line right there, okay? If the MACD is above the signal line, the histogram will be above the MACD's baseline or its 0 line. If the MACD is below its signal line, the histogram will be below the MACD's baseline. Traders use the MACD's histogram to identify when bullish or bearish momentum is high and for possible overbought or oversold signals. You'll recall when we talked about RSI, when we talked about channels, we talked about the overbought areas and the oversold areas, and that's not necessarily the way that we use it, where again, typically we're using RSI for divergence, but in this case, it also presents you different views about oversold or overbought conditions. Case in point, let's have a look over here. Take my face off, Ramram, because I gotta show them a little piece that's, yeah, there we go. So look at this extended area over here when we had the MACD lines all the way up to 0.7. So essentially, that was the top that we made yesterday morning, and we essentially sold off after that, right? And so when you see these extended areas, this could be used by mean reversion traders to kind of gauge where we are extended in a certain price in a certain time frame. Now you can look at the 5, you can look at the 20, however you're trading. But the idea here is to be able to identify it in real time and to be able to take a trade based upon that. Now look how nicely this peak over here on the MACD line coincides with these wicks above the $30 level. So you hear me talk a lot about this on the futures when we have a wick into price resistance or wicks down into price support, and how you're trying to look and see how that price is actually doing, what the stock is actually doing at that particular price. Are buyers overwhelming sellers? Where are the closing prints taking place? Are they above or below resistance levels? Look at this. So you have wicks above 30 and all the closing prints are south of that 30. That should have been an indicator for you. And then coincide that with the extension here of the MACD to the highest point here at 0.7, and then add to that you have the, I don't want to call this the death cross, but you have the, sorry, what is this line called? The MACD line cross the signal line over here, indicating a possible sell, and there you go. That is reflected on the chart, and you could have made like a nice nice little $1.50, maybe a little bit less. It found some support at that 28.50 yesterday. This is a firm, guys. So that is a look at MACD so far. Yeah, we can talk a little bit about the differences between relative strength, but I think we'll leave that for a different one. Any questions so far?
There's a question from Raphael in the chat. The position of the crossing in the MACD also matters, right? If it's above the medium in the histogram versus below the medium.
Yes, absolutely. So if it's below the median, then basically your idea here is, okay, well, if it's below the zero line, it's in a negative territory. So this is what you would call oversold conditions. So this area over here where you have it below the zero line, this is basically an oversold position. And over here, look at this. When we dipped down into 29 and it held 29, look where the MACD was. Right in that oversold position, south of that 0.0. In fact, was south of negative 0.1. And that kind of showed you the same thing that we saw over here, but in the opposite, okay? Look at those dips into 29. All the wicks into 29 are all being bought up in the same way that the wicks above 30 over here were being sold off. So this it's actually a really, really nice confluence between the price action and the MACD on both these occasions, whether it was the 30 rejection or it was a 29 hold on AFRM. So good looks there. I
have a question as well. Yeah. So I might, maybe we already know the answer, but so with a lot of these technical indicators, the more volume you have, the more it confirms the trend. Is that the case with MACD as well, if there's crossing while we have a lot of volume?
I just got to fix something for a second. Guys, the position board is absolutely wrong.
I was going to say, I'm in meta.
Yeah. So I'm long, and I'm long a firm at $30.31. It says I'm short 31.11. Can we, yeah, thanks, Ram. Ram will get right on that as we take another piece out there on AFRM. Can you repeat your question?
Oh, yeah. So my question was, so with a lot of the technical indicators and patterns, the higher the volume, the more it could confirm the possibility of it happening in that way. Is that the same with MACD? Okay.
Always.
Perfect.
Yeah, I think volume is like kind of ubiquitous in its use. You're always looking for volume as confirmation.
Okay.
It may or may not be there, but if it's there, I definitely take note of it.
It helps bolster it.
Absolutely.
Okay, thank you so much.
No question about that. Yeah. One of the main problems with a moving average divergence is it can often signal a possible reversal, but then no actual reversal happens. It produces a false positive. And that's normal with a lot of these indicators, right? The other problem is that divergence doesn't forecast all the reversals, and price levels do, because that's why you need to chart. In other words, it predicts too many reversals that don't occur and not enough real price reversals. And that's something that you'll probably notice if you use it often, is that it can predict oversold or overbought conditions or give you false crossover signals when the MACD line crosses the signal line, either from the high side or the low side. And this is not something that I personally have experience with. Again, I don't use this on a day in, day out basis. I know that there are intraday traders that do use it. They use it for small caps, they use it for large caps, and every which way. I tend to use it more for analyzing my swing trades, but it is fractal and it is usable intraday. If you want to go to the chart. This suggests confirmation should be sought by trend-following indicators, such as one indicator called the Directional Movement Index or the Average Directional Index. We won't talk about those. Okay? Investors following the MACD crossovers and divergences should double-check with other indicators before entering a trade. For example, a MACD may be showing a bearish divergence, so check a different signal, which we will talk about maybe at a different time, to tell you if a trend higher is actually going to take place. Don't rely too much on its signals. It has a tendency to give you false signals. I guess that's really what I'm trying to say in a very labored way here. So MACD, interesting use, and it's very visually appealing to be able to see these histograms flip between positive and negative, looking at the crossover between the lines, also very interesting as well. The distance created between the lines shows an overbought or oversold position depending on whether they're happening above the zero, the baseline, or below. So these are all things that you have to kind of figure out as you use it more and more often. All right, let's look in the chat here to see if there is anybody asking any interesting questions. Sorry about that, QB's Mo 85, the position board. It's still doing it, Ram. Yeah. Well, the position board is still inaccurate, guys, but the Chilean nightmare is back, so hopefully he will be taking care of that. The one, Sharif, is the MACD a delayed indicator? Everything, it's not a delayed indicator in the sense that the information that you're getting from it is delayed, but all of it is based on price action that has already happened. And by virtue of that, it's kind of a lagging indicator. However, it's supposed to give you an insight into what possibly can take place given the current state of the moving averages. So in this example over here, when you have a crossover by the MACD line through the signal line to the downside, even though, you know, we may not have had the big move down, it's supposed to indicate that we may continue to trend down. So I've seen books describe this as a leading indicator. I've seen others describe it as lagging. I mean, it doesn't really matter as long as you use it appropriately. Bruce says, Power says it's useless. I mean, I wouldn't call it useless. I'd say I wouldn't rely too heavily on it on its own. I'd look for convergence with the price action. I think the best examples, honestly, so far, and I'm lucky to have chosen this one, is Affirm, because look what it did at the $30 level again over here, and you had the extension of the MACD, and then you had the crossover right here, and then you had these wicks, like I've been showing you guys. When you have wicks into a key level, and the $30 level for me would have been absolutely key, as it is that $10 level, and look how all the wicks move up, and then they're immediately sold off, and all the closing prints are either at or south of $30. That would have been a dead giveaway to me. In the same way that it did over here at 29, all the wicks south of 29 are immediately bought up and close above 30. At the same time, you had an oversold indicator below the baseline on the MACD, and it flipped over here, maybe a little bit late, but I wouldn't call it completely useless. The wicks and convergences are telling me something, not the MACD. Look, I mean, if that's how you see it, Squanchy, then I love that name.
I love like how you see it, said it so seriously.
Did I say it right? Squanchy?
I think that is correct. I just love like you just said it with like you just said it. It was
yeah,
the name.
Look, the wicks are important as well, but you know, it wouldn't hurt to see whether the instrument that you're trading is in an oversold or overbought condition. It's not going to hurt you at all. I mean, I don't think it personally would hurt me. It would help me kind of identify how aggressively we've been running up or running down, and to kind of figure out, you know, how aggressive I want it to be with the trade, given where we are. Yeah.
Yeah. I was going to say, too, it seems like with all these indicators, sometimes they will be relevant for a certain trader, for a certain stock at a certain time, and sometimes they won't, right? So I think it's like one of those things where it might be like VWAP, where it's kind of useful, at least I think for myself, to kind of know for every stock, but I won't necessarily rely on it for my entry point of every trade. Do you know what I mean? So I would argue that potentially is the same for MACD. Like, it has some indicators that are nice to know. So for example, like, you know, with VWAP, it's generally cool to know, are we above VWAP? Are we below VWAP? Is this stock, quote unquote, respecting VWAP? That could also still be useful for the MACD, right? To know, like, oh, are we, you know, overbought, oversold? What's the vibe? What's happening, right? So I think sometimes it's nice to have just kind of for a general sense of the market climate, or for the climate of the particular stock. That would be, I think, my take on it. Also, just an update. Not in any trades right now. I got out of Meta because we broke below my area of risk. So we lost like 40 cents a share. Nothing that I will be crying myself to sleep over. I would rather, you know, adhere to my risk parameters than lose more. Do you know what I mean? But, you know, I'll keep an eye on this. Not in it right now. I am trying to dip my little toe into Novo Nordisk over here for a short. And I will explain why. Because we're seeing lower highs. We're down on the day. We had a negative catalyst, which is that Eli Lilly's weight loss drug, Blue Novo Nordisk's weight loss drug, out of the water. So I like that we're down about 2.15% on the day. You know, I'm waiting to kind of get my fill there for the short. I have a plan of like exit if this goes awry. Yeah, we'll see what occurs. But yeah, I'm liking this right now, and we are partially filled here. So yeah, that's the look on the trades right now. But yeah, I think in general, MACD, like all the indicators from my understanding, is basically you don't have to use it in every trade, but it's nice to kind of know what it's doing.
Yeah. All right, let's look at some examples of MACD crossovers. This is one, obviously it's not in the wild. All right, we'll just wait for them to come to the chart, right? All right, examples of MACD crossovers. As shown on this chart, when the MACD line falls below the signal line, okay, so the MACD here is blue, the signal line is yellow on this chart. When it falls below the signal line, it is a bearish signal indicating that it may be time to sell. Okay, conversely, when the MACD line rises above the signal is bullish, suggesting that the price of the asset might experience upward momentum. Some traders actually, they don't use that specifically. Some traders wait for a confirmed crossover above the signal line before entering a position to reduce the chances of being faked out and entering a position too early. Geez, how many times have we all said that? Crossovers are more reliable when they conform to a prevailing trend. Okay, it's a momentum, it's trend following. If the MACD crosses above the signal line after a brief downside correction within a longer term uptrend, it qualifies as a bullish confirmation and the likelihood of continuation of the uptrend. So what you're looking for is the preceding trend before the crossover. So if we were in an uptrend and then you have a bearish cross and then you have another bullish cross after that, it may be continuation of the previous trend. Or maybe you might not even have a bearish cross, maybe the two lines narrow a bit, because that's one of the things that you're also looking for. The distance between the signal line and the MACD line. The greater the distance between them, you know, the more extended the price action is. The closer they become, the more consolidative the price action is, okay? And that's what you're looking for. You're looking for crossovers and distances between, between the two lines, the MACD line and the signal line. Okay, so that's what I want to say about that. If the MACD crosses below the signal line following a brief move higher within a longer term downtrend, traders would consider that a bearish confirmation. So it's continuing with the longer term trend. So in the way that we were looking at, what was that one we were looking at earlier where it was important to know the trend? Yes, the continuation patterns.
Yes, yeah.
When we looked at ascending wedges and descending wedges and symmetrical triangles, these are continuation patterns that typically continue the trend that preceded them. So in how that was important in that context, it's important here to know basically where the preceding trend was taking you before the either bearish or bullish crossover. So interesting look there. That's a lot to kind of take in, and it's a lot harder to implement in live trading.
In the wild.
Yeah, in the wild, right? Because you got to do this stuff very quickly. And again, I don't typically use these indicators on a day in, day out basis, Adara. Any questions or anything that we?
I think generally, like, I probably will have questions that will kind of, okay, actually, yeah, you know what? If we can just bring up a firm again.
Yeah,
so
yeah,
I can
go for it.
cross-reference this. So if we have a lot of, as you can see, like kind of the positions of the blue and purple lines, like the signal and the MACD kind of change throughout. So does that mean, like, I guess I can, what I'm trying to say is I can understand why it would be a confusing indicator to
Can
trade
you
with,
repeat
right?
the question, because
I'm trying to
they
find
were
a way to
talking
word
to me
it.
in my ear.
It's okay. I'm just trying to find a way to kind of verbalize it.
Yeah, no problem.
So I guess what I'm seeing here is that we have like a lot of different kind of crosses in and out of the blue and the purple.
You got
lines
one
here,
right here.
Yeah.
And then now, look what the price was doing here, Adara. There was a clear spike in the price, right?
Yes.
And then, so now we know that because there's a clear spike in the price, now where would you say the biggest distance between the two lines took place? Like right here.
Right there, yeah.
Right, and that happens to coincide with the biggest price move.
Oh, okay.
True? Okay. So that gives us an indication right away. As soon as the distance between the signal line and the MACD line starts getting wider than typically is the average, we need to be on the lookout for a possible reversal, because we are getting into the overbought territory.
Okay.
Okay.
So then the closer the lines are, the less likely there is for a reversal.
Absolutely.
Okay,
it becomes a more consolidative market. And then look what happens, right?
Yeah.
So even though we're downtrending here, and there is space between them, but the closer the price action gets, the closer the lines get to each other.
Okay.
Right? And so then we don't really have any breakouts or breakdowns until right here. Surprise, surprise. Look at that. And that's where we start making the move.
And then it's a little bit wider there too, right?
Yeah.
Okay.
So look, it's a delayed reaction because if you were to wait,
That's true.
That's
Okay.
that's what sucks about a lot of these when you use them intraday. Is that the delay can cost you the entire trade. That's less likely to be the case on a swing trade. Now, here, let me make my point. So look at the blue line, the MACD line. Okay, so it gets extended. So if you were to buy it simply based upon the distance that it's creating from the signal line, you would have done well. However, if you were waiting for the cross to take place, you would have missed quite a bit of this move. You would have missed this entire candle. So from that $27 move to about $28.25, you would have missed $1.25 before you would have got the indicator to buy. And that's just part of the game.
Fact that it's lagging.
That's just part of the problem.
Thank you. I appreciate it. I think I get a better sense of what is happening with MACD now.
And remember we were talking about yesterday about the crossings of the moving averages?
Yes.
Like the 50 above.
The golden and the death.
There you go. And so how, by definition, if you were to wait for the crossings of those moving averages, you would have left money on the table both on the buy and on the sell side, right? Because you would wait for the 50 to cross the 200.
Yes.
And it wouldn't cross it immediately upon the stock starting to pop. It would be quite a bit afterwards. It really depends on the stock on how much afterwards. So here, for example, if you were to get the cross, right, you would give up about $1.25, and then you would wait for the sell. So if you were to sell, you would sell about right here. Well, where was the price around right here? It was around 237. So you gave up $1 off the top before you got the signal to sell. So there is that inherent problem with